Everybody, it's Darin Garman with Trot. Hi, Trot.
Hey, Darin, how are you?
I am good, and I know you are too.
Yeah, I'm great. I'm always good.
You want to know why?
Because I'm on this week's episode of
The Heartland Multifamily Show. It's the place
For All Things Multifamily.
for all things multifamily. And we were talking, let's just call it like off camera, and we're not even really going to, this isn't like let's just call it a planned podcast. We were talking off camera.
Yeah, not like a 3-page script.
Right. It's not like, okay, we're having a production meeting and here we go. And we were talking about, well, Trot, why don't you tell everybody what's going on and what we're up to and some of the questions that, especially over the last 7 to 10 days that we've been getting. And let's kind of go from there.
Yeah. Well, for some context for the viewers, in the past we've done some capital raising, and we've kind of started ramping it up again. And the
kind of.
Yeah, kind of. The number one question we're getting from our what would we call it? Our inner circle.
Yeah, I'd call them like our inner circle, folks. That's probably pretty accurate.
And is, Darin, why are you raising $16 million right now?
Yeah. So what are you up to? Why are you raising $16 million? What's going on? What are you up to? And when you have a relationship like we've got with and we call them our inner circle folks, and you can get an idea who they would be. People that have been with us for a long time, got a substantial amount of money with us and own properties with us. Some, decades. And when we are on a very much, I would call it, when we're very much playing offense. Okay, they want to know. They don't know what's going on. And then when we have conversations with them about we are going to be raising, the plan is $16 million, and they're like, well, holy shit, what are you guys doing? What's going on? And that's really kind of been, pretty much the work around here, the talk around here over the last 7 to 10 days. And so as we're kind of working on this and having these conversations, we thought, well, we may as well, maybe turn this into a quick podcast and let people know, not that we're doing this. We're letting you know that, but kind of maybe some of the reasons why, because we thought it would be pretty instructional, and I think it will be. So hats off to you. You had a good idea with that. So nice job. Thank you. So let's talk about that. Let's talk about why are we raising $16 million right now? What's going on? What's happening? And what's the deal? And so let's give you the brief, quick answers to why we're doing it and why we think it's important. So first of all, it's one of our bigger capital raises that we've had. And the main reason is not going to be a surprise to you if you've been paying attention. So let's talk about that first. Let's hit the kind of the low-hanging fruit first. If you've been paying attention, even if you haven't really been in the multifamily, I call it space much, over the last year or two, you've noticed a few things. Talk about what we've been seeing just in general with like interest rate, expenses, those kinds of things. Talk about that.
Well, what we talked about earlier is, expenses such as insurance and your mortgage payment and taxes and stuff like that. We've seen almost 200 to 300% increase in that payment in 2 years, 3 years?
Yeah. And so, what Trot's saying is that if you throw together the basically interest rates doubling, you combine that with huge property tax increases that have been seen by many, many folks, and you throw in huge property casualty insurance increases that have been seen by many, many folks. At first, you might be thinking, 100%, 200% increase in expenses for some folks. Come on, you guys are full of it. That's exaggerated. There's no way that. But I'm telling you, we know because we see it. It's definitely the case. And so as a result of that, we are starting to see properties come to us with owners that are like, I need help. I gotta sell this. I need help. And it's mainly because what do they have? It's because of what we talked about, but what do they have coming due here pretty soon?
They've got a balloon payment. They've got a loan coming due.
They got loans coming due. And when you've locked in a loan at 3% or 3.5% and rates are double that, and you got loan coming due, along with higher insurance, property taxes, labor expenses too. I mean, nobody's making minimum wage, not even close anymore. And you throw all those things together, and we are getting more and more owner operators that are approaching us with opportunities of, hey, can you take this off of our hands?
Right.
Can you please take this off of our hands? It's just not working for us anymore. And we're seeing, let's just say, handfuls of these. Now, full disclosure, we haven't taken advantage of any of them yet because they just haven't been good enough for one reason or another. But why the 16 million? There will be those that will be good enough. And I see this coming. I don't think that you need a PhD in economics to see this coming. I see this coming. And when we are going to be able to purchase multifamily real estate at significant discounts to value because of this, you want to be ready to go. You don't want to be playing catch up and say, oh, gee, I wish I would have had enough capital around to take advantage of all of those problems in those discounted property opportunities in late 24 and early mid 25. You don't want to be having that conversation like we talked about. So we're getting everything ready to go. We've already, as we talked about, started seeing properties come to us with owners that are, I got to sell, please help me. And so far, for one reason or another, it has not been the case. So that's like part one of this. And here's like an interesting part two, and that Trot and I have seen in discussions that we've had that in a way don't have really anything to do with multifamily specifically, but in a more macro level, it does. And it has to do with what's going on out there. So, how calm and tidy are the goings on right now out there, Trot, with everything from wars to politics to financial markets. How are things going out right there?
It is hectic, to say the least.
It's absolutely crazy. We've never seen anything like it, probably historically. And so, not surprisingly, our inner circle, and some folks outside of it, but our inner circle, they're not only wanting to get involved with us with this capital raise in terms of, being aligned with us to do this because of what we talked about with the discounted opportunities that we see coming up. But it's also about protection and insulation too for them. So, they are looking for a place, and we have a place here, Heartland of America, multifamily. It's pretty boring, okay? Pretty predictable, yawn, yawn, yawn. But it's pretty damn easy to park your money in a place like this that has the insulation and protection as well. That's the upside. So when you have discounted opportunities coming up on one hand, we've seen them already, more are coming, we know it. You've got insulation and protection as your as kind of your side benefit. By the way, look what else you get. It's no wonder that we've got the interest that we do in being involved with our capital raise, which is, of course, another reason why people want to be aligned with us as we go ahead with this capital raise in looking at owning more and purchasing more multifamily real estate that qualifies for us to own, which passes our litmus test, which is, of course, another podcast for another time. We won't go over that, but that's what we're doing. And that's why people are lining up with us. And by the way, there are other places out there that provide some protection and insulation too. So, but we're not just talking about protection and insulation from financially. So let's talk about that just for a second. So when you talk about financially, you have properties here that have the protection for investors in terms of preservation of wealth and rates of return, and we're able to buy them at a discount. So that's the financial end of things. We're buying them at a discount. We see high returns, potential returns, and on all that. So all that's in there. Okay. So financial, yeah. But the protection part of it is not so obvious because there's the things like, well, Darin, what about like a bank? So we've had that conversation, Trot. So people, bank CDs, bank's pretty safe. Returns on like CDs are pretty good right now, like 5-6%. But, not even then are you safe because, we just looked at it not that long ago. There are banks failing and, closing down. So that's not out of the realm of possibility. So that's not like all it's cracked up to be. So there's that. And then there's, the other part of the puzzle, which no one really talks about or thinks about, but it's huge. It's like data theft and money theft electronically. So you can't pick up a publication, or you can't go online, try it. When's the last time you saw some kind of information about a data theft or somebody's money being stolen?
Every day.
It's like every day.
And it's to pretty large size companies too. It's not just mom and pop down the road.
It's not just grandma, falling for a phone scam.
Right.
It's the big companies too that should know better and just think the software and the infrastructure and the firewalls. That's another podcast there. So, Darin, what are you saying? Part of the $16 million capital raise is not only the obvious, taking advantage of discount opportunities that we're seeing already. We'll see more towards the end of the year. I've seen it. We'll see even more into next year. I've seen it. It's coming. So we want to be ready for that. So that's like the obvious part of it. But the not so obvious part is the protection part. With everything going on out there, when you want insulation and protection, not only financially, but also data-wise and theft-wise. I mean, is somebody going to break in and steal our 100-unit apartment community?
No, but maybe they steal the rent roll, or maybe they find a lease online.
They might get their hand on an invoice or something, right?
Right.
Yeah. And we're kind of joking about it, and we are, because it makes us feel good that we've got money that's protected there. And that's really another part of it. So you throw those two things together, and it's not that it doesn't really become such a mystery then anymore as to why we're looking at, and we're in the process of raising $16 million. We're well along our way, and why anyone would be thinking about, Heartland of America with what you guys do with multifamily. And at first it doesn't sound like it's real obvious, kind of boring there. You guys don't really do much. I mean, what goes on there? To, kind of makes sense. And so when you tap that information into, folks that have been with us for a long time, our inner circle, it's one of the main reasons why, we have the questions and the activity from them, of course, wanting to be involved with us, wanting to, do what we're doing and ride along with us through this. I mean, it's not a surprise at all, and that's really what's going on. So you thought, which smart move by you, by the way, it'd be good just to share this information with people in terms of, we don't really talk about this very much. It's kind of a behind the scenes kind of thing, and so why don't we talk about it?
Yeah, and you know what? We can make the point I'm going to bring up quick is we can make a whole different podcast about it. But you had mentioned, people being in a position where they need to sell. And I think their position for needing to sell is going to come up in the next, to really, really need to sell will come up in the next, I don't know, let's say 6 months. Yeah. When their loan is really close to coming due. Because right now when we're looking at these properties, really the biggest reason why we're turning them down is because they still want over market value for
or there's like an issue like, we can't live with that.
Right.
Well, let's use a real example. So we had a conversation with some folks that own a pretty large apartment community. I mean, we had a conversation with them 18 months ago or so, like maybe closer to 14 months now that I think about it, but 14 months ago or so. And, the conversation was about price and terms, and, we're pretty far apart. They've got now less than 12 months until their loan comes due. Now we're having much different conversations. Now, we haven't committed we haven't agreed on anything yet, and I don't know if we will. We'll see. But it's funny now, in the last 6 months, how we've gone from one level of conversation to another level of conversation. And I can guarantee you that in the next 3 months, if nothing's really hammered out, it'll be another level of conversation. This is what we're talking about.
Right.
It's exactly what we're talking about. So yeah, look, at the very beginning, of course, you're going to try to get as much as you can. Any owner investor is going to do that. But once reality starts to set in and the clock is ticking, I mean, you can't get time back. It's going to keep going. You got to start making some decisions, and those decisions provoke different conversations, and pretty soon we're having a different conversation now than when we were 6 months ago, and we'll have a different conversation with them 60 days from now if we're still going back and forth than we are today.
Right.
And that's really good. That's a really good thing to point out. And this is going to be ongoing. It'll be something that will be. Look, we don't want anybody to have a problem. I don't want that for anybody to go through a whole bunch of challenges like that. We don't want that at all. However, reality is what it is, and I don't want to be telling my grandkids the story of 2024 and 2025 when all of these great opportunities were coming available. And what were we doing? We were, sitting around, just kind of talking about it and wishing we would have done something about it.
Right.
We don't want to do that. So anyway, try that's what we're up to. Oh, before I ask you your final, maybe a final comment on this, one thing I want to mention to people is, this is kind of an inner circle thing for us, but I know that there'll be some of you that'll be like, hey, what are you guys up to? What are you doing? What's going on there? You contact us. We'll send you what we're up to and what's going on. Just for informational purposes. We got no problem in doing that. We're not looking to sell anything. This isn't like a sales pitch or anything. And so, I'm sitting here thinking out loud that, people will probably, kind of what are you looking at? What is kind of your philosophy and what are you doing? And, kind of take me behind the scenes a little bit. We're happy to do that. We'll do that. So our contact information is below. It's all over the place here. Make sure you get in contact with us, and Trot will send you, at least some information on what we're up to and what's going on. If that's obviously something you want to look into. So Trot, after saying that, kind of talk about maybe a final comment or two about what we're doing. Our inner circle guys, why they want to be involved with us, why we're raising $16 million, what you see going on, conversations you're having. I asked you 8 things. Go ahead and mention 2 or 3.
Yeah, well, I think it's interesting the perspective that we're playing offense, because a lot of people right now are playing defense. They're just trying to get by, basically. Yeah. How are we going to get by over the next year, maybe 2 years? Yeah. And so they're playing defense, and they really don't have another option, because even if they start raising money, it just goes to, buy out their partners or something. It's really not building that much equity for them. Right. So, yeah, I think it's a very different perspective, what we're doing at this time than a lot of other real estate groups.
Yeah, and you're right. A lot of them don't have any other choice,
right,
but to play defense right now, and I get it, and I won't go into our philosophical strategies and how we got from where we were to where we are now, and our liquidity and all that, because that's kind of boring, to be honest with you. But it puts us in a position where we can be in a position to have these conversations and play offense.
Right.
And also, in addition to playing offense, we want to have the Tom Brady offense. So we want to raise another $16 million so we can do the Tom Brady offense.
Right.
Not just the plain old offense.
Yeah.
So, thank you. Appreciate the idea. I thought this was good for us to talk about it. And appreciate you joining us on this episode of the Heartland Multifamily Show, the place
for all things multifamily.
And again, I'll just mention real quick, if you want to grab some of that information that we're kind of working on it, we're doing, just for informational purposes. What are you guys up to? What's happening? What's all the fuss about? And just contact us, and Trot will be happy to get some stuff out to you. All right, thanks everybody. Take care. We'll see you. Bye-bye. If you enjoyed this video and you want to make multifamily a bigger part of your investing world, make sure you click here on this video to discover the 3 easy ways to invest in and own your own multifamily property.